this actually does go through, this will be quite devastating to the Canadian economy. When we look at Saskatchewan, closer, looking at some of the data, we see that Saskatchewan exports are about $49 billion, and about half of that is to the U.S.
This is the Saskatchewan Real Estate Podcast.
Hey there, and welcome to the Saskatchewan Real Estate Podcast. This episode brought to you by Realty Executives Gateway Realty in Melfort. I'm your host, Ron Caroni. I am a licensed mortgage broker in both Alberta and Saskatchewan, here to guide you through everything that you need to know about real estate in our incredible province. Before we jump in, I've got a quick favor to ask. If you're loving the content and want to stay ahead of the game in Saskatchewan's real estate market, make sure to subscribe to the channel. Your support helps us keep creating this podcast and sharing valuable insights with listeners like you. And hey, I'm not just here on the podcast, I'm sharing even more tips and updates, behind the scenes content over Instagram and Facebook. Look me up, hit the follow button, and let's connect. Let's get into today's episode. Today, we are diving into Saskatchewan's economic outlook for 2025. Did you know Saskatchewan led Canadian GDP growth in recent years, hitting 6% in 2022 and continuing strong with 2.3% growth in 2023. In terms of economy, population, and employment growth, Saskatchewan remains strong, and we have one of the lowest unemployment rates and one of the highest GDP's growth among the provinces. But challenges remain: inflation, a weaker Canadian dollar, and policy shifts like the digital service tax are impacting businesses and real estate markets across the province. Today, in this episode, we are going to discuss which sectors are thriving, which are facing headwinds, how global factors like inflation, potential tariffs are going to impact Saskatchewan and its economy, and what opportunities 2025 holds for investors, businesses, and policymakers. Obviously, it's always great to have someone who is well-versed in these topics, and that's why always happy to have Michael Hernik, the financial mechanic, come on the Saskatchewan Real Estate Podcast to help us unpack these topics and provide actionable insights. So whether you're a real estate professional, business owner, or someone keen on understanding Saskatchewan's economic future, this episode is going to be packed with information tailored for you. And for anyone who's caught any of our last episodes with Michael, I know this is going to be a fun one. Michael, welcome back to the podcast.
Thanks, Ron. Looking forward to the conversation.
Michael, let's just get right into it. What are the key indicators suggesting that Saskatchewan's economic trajectory, where it's going to be in 2025?
Yeah, we're in a really interesting time, Ron. One of the things, obviously, as the audience knows, our neighbors down south have gone through a presidential election. So now with President Trump, this is causing a lot of anxiety for Canadians, business owners, individuals, particularly the discussion around tariffs and the impact of the Canadian economy. So this has been a really, really big impact, or certainly one that may come to, Canada's broad and impacting Saskatchewan. We're also sort of seeing, inflation at below this 2% level. Again, this can sort of, be discussed and sort of understood as either being good or bad with respect to a slowing economy. The Bank of Canada ultimately does want a sub 2% inflation rate, so we're about 1.8% right now on a year-to-year average. So this is good, but it also could mean that there is some uncertainty ahead of us. So that, as you noted too, with a weaker dollar, there's a lot to unpack and discuss.
If we can dive a little deeper into some of the sectors that you're looking at of these impacts that are taking place in Saskatchewan, what parts of the economy are you thinking are going to be affected?
Yeah, so again, we don't have any direction on tariffs yet. One of the things that the President Trump administration has commented on, that Canada, Mexico, and China are going to be seeing these tariffs, and maybe others in particular Canada, of 25%. And again, if this actually does go through, this will be quite devastating to the Canadian economy. When we look at Saskatchewan, closer, looking at some of the data, we see that Saskatchewan exports are about $49 billion, and about half of that is to the U.S. So certainly, if tariffs are imposed, this will cause some challenges and things to consider for these businesses and industries. But and when we look at this particular industries in the resource sector, we have oil, we've got potash, uranium. I took a look at some of the data, and the U.S. actually 80% of the potash imports from the U.S. are from Canada. So the U.S. is quite reliant on a lot of the resources and agriculture and so forth that Canada has. So certainly, this is a very keen time to have your eyes open and sort of to pay attention to what will happen.
And an interesting conversation around the rhetoric of tariffs, in that sometimes it's presented on the news as if it's going to be the Canadians who are paying these tariffs, when in fact it's actually the US consumers who will end up paying those tariffs. Whichever country decides to impose those tariff restrictions, it's ultimately the end consumer who ends up paying that tax. And so for things like oil, uranium, potash, it might end up being, if these are necessary resources, no matter what, that it's more of a net negative for the American consumer and not the Canadian. What's your thoughts on that, Michael?
Yeah, that's exactly it, Ron. When you think of the idea behind tariffs, what is it trying to, motivate, or in other words, dissuade, right? And when to the extent the U.S. does impose tariffs on Canadian exports, this means, as you correctly noted, the U.S. imports from Canada will cost more. So in turn, this is going to cause U.S. Businesses and government and others who are buying Canadian products to be paying more. The question we have to think about is, to what extent is that going to impact future sales and Canadian exports out to the U.S. And one of the things that's interesting for Saskatchewan, because we are so resource rich, the question becomes, well, to what extent is there sort of competition or elsewhere these commodities can be purchased? In a lot of the cases, I would argue there isn't. And that's one of the competitive advantages I think Canada does have is, okay, yes, we have these tariffs that are coming, potentially coming in, but Saskatchewan's well positioned because these are commodities that, again, aren't really readily available everywhere. Certainly, you have U.S. producers in some of these spaces for sure, but Saskatchewan, one of the richest resource sectors, uranium, again, huge investment in potash, again, as you're aware with what's going on with the investment in the province. So the question now becomes, well, can these products, services, and so forth be purchased elsewhere? And I think I'm not convinced that they easily can be. So the question now becomes, well, are U.S. businesses and individuals ready to pay this potential tariff or not? So.
All very interesting. And as you're kind of outlining, maybe here, because we are such an export economy of precious resources, a lot of this stuff might hit the manufacturing sector in Eastern Canada a lot more, where you have vehicle manufacturers. And if you have more of this, bring it home to America, they have a large vehicle manufacturing sector. And this might be more detrimental to other parts of the country. And in some ways, we will share that collectively. But there might be some insulation based on our natural resource economy. Quickly touching on the Canadian dollar, and I think this piggybacks on this nicely, because a low Canadian dollar is really bad for consumers, because if you're consuming products that are from other places where it's very expensive to now convert your dollars to buy those things, on the inverse side of that, your export market becomes much more competitive, because these other countries are able to buy your exports at a cheaper price. So do you see that as kind of a countermeasure to this as well? If tariffs are in place and we do have a weaker Canadian dollar, that we might see a bigger export market?
That's a really interesting perspective, Ron. So let's talk about that. So the dollar right now is about just under 70 cents, so 69 cents roughly, which is quite weak. And this has been personally a huge concern of mine, mainly showing and demonstrating the sort of the lack of competitiveness compared to our neighbors down south. And this has sort of been slipping over the past number of years. I still remember the time when the Canadian dollar would be really at par, if not sometimes higher than the US dollar. So it's really interesting to see how this is happening. And we're certainly on a trajectory lower. But yes, how does this impact sort of Saskatchewan, Canada, and the bigger picture? It's interesting. You're right. When you have companies that are buying our products, they're buying them, particularly in the U.S. dollars. They'll be buying a lot more because our dollar is so weak. So for them, it's great. Unfortunately, for companies here, sure, we might have larger sales and so forth, but the big thing that I think people don't realize is that it does, to a certain extent, dissuade investment and further expansion and investment in the in Canada, right? So when you think of multinational companies that want to, do business here outside of regulatory pressures and so forth, if they're putting millions and billions of dollars, building mines and exploration initiatives and so forth, you spend all this money, and then in a year or two, if the value of the purchasing power of the Canadian dollar is falling, in turn, this is sort of a hidden tax on the Canadian dollar. So, why would I invest in Canada if the dollar is falling when I can invest in the US, where it's quite the opposite is happening, where the US dollar is actually getting stronger? So my largest concern is really the shift of competitiveness that Canada has, and it's really unfortunate, Ron, because Canada has so much to offer, and it's a great country in many different ways, but certainly for business and investment. So I'd like to see more initiatives to sort of stimulate that investment, and a weaker dollar doesn't help that.
Okay, coming up, we're going to talk about another thing that might hurt that competition base, and it's talking about capital gains. We're just going to take a quick break, and we'll be right back after this. Whether it's your home, business, or farm, Pioneer Solar and Renewables has you covered. As leaders in residential, commercial, and agriculture solar solutions, they make clean energy easy and affordable. Visit pioneersolarenergy.com or give them a call to begin harnessing the power of the sun today. Investing in real estate? Let One Tree Property Management take care of everything. Finding properties, purchasing, renovations, leasing, and management, leaving you to focus on building wealth. Whether it's a single rental or an entire portfolio, they serve Saskatoon and surrounding area, helping maximize cash flow and minimize stress. If you're looking for an expert to manage your investment, reach out today, home@meetkrishna.ca. Once again, we're joined by Michael Hernik, the financial mechanic. Always great to get Michael's perspective on financial topics. You are one of the smartest people I know in the real estate sector, Michael. So I always love getting your take on things. And it was actually you that we had this discussion with. I believe it was last year when there was this change to the capital gains inclusion and commercial listings. So, there has been a negative impact on commercial listings due to the change in the capital gains inclusion. Can you explain what this means for the Saskatchewan real estate market?
Yeah, yeah. First of all, I'm humbled by your feedback. Thank you. One of the things that I like to do on the side, outside of just teaching and being a CPA, is just doing my own research into these things, because I find these things fascinating. But yeah, so the capital gains, for anyone that isn't maybe aware, there's been a change in the inclusion rate from 50% to 66.67%, or two-thirds in particular instances, in particular for corporations and trusts, and gains over $250,000 for individuals. So one of the things when this happened, I did a little bit of research with a few friends of mine who work in commercial realty, and I said, hey, I'm curious to know if you can show the number of commercial listings available from basically the 6 months before the change, which was June 25th, 2024, and then 6 months afterwards. And what we were able to see is that there was just under 500 listings in Saskatchewan before, and the 6 months afterwards were under 100. So basically a five-fold drop. So the question now becomes why? Well, certainly it's, there's multiple variables to why that's happening, but the spring sales and so forth is a big one, right? People like to list their properties when it's warm out, not when it's cold out, and so forth. But this was concerning to me, and so I I took the initiative and sort of wrote a letter to the government and explaining my concerns about this, because I said, well, look, this isn't just a matter of, okay, well, there's more tax on capital gains. The issue becomes, well, an economy flourishes because it needs capital to flow. We need transactions to happen. We need buyers, sellers. We need money. We need real estate. We need all of these things to happen, because if there's no movement of money and capital and transactions and so forth, there is no economy. So what I argued is basically, we need transactions to happen, and if we have fewer transactions, then this is going to cause prices to rise and adverse effects, right? Because now, as you can imagine, if you're somebody who owns commercial real estate and other, capital property, you're not going to sell anymore because now you're going to be, including an extra third of income into your tax return. So you're going to take a second thought and say, well, do I need to sell this property or not, right? So this is kind of what I wanted to see if the data showed this, and again, it's probably still soon to sort of demonstrate this. Now, I'm hopeful that this might still go back to the 50% inclusion rate. We'll see what happens, I guess, federally here in Canada with respect to the political side, I guess, from a tax legislation perspective, because usually when there's a change in administration, you have some changes to the sort of tax regime. So we'll see what happens from that perspective. But yeah, I guess comment that yes, I would argue that the new capital gains inclusion change, has adverse effects that we are maybe starting to see, if not will continue to see, unless something changes.
Before we get to my next question, I just want to point out how important it is what you personally did there. And even though maybe it felt like a small thing and maybe you're just sending a letter into just a sea of oblivion, you took the initiative to outline a thought and send it to a political leader. And I think if more and more people did that, we'd see more positive change within the country around things. That if you have people who have know-how and you're actually connecting with people who can make change, that's when positive things will happen. So hats off to you for taking initiative on that side. And just kind of piggybacking off of this chat about capital gains, what are some strategies, like if you know of someone right now who they have a commercial property, or if they have something that they're thinking about selling but they're considering, are there any strategies that they could implement to help with this?
So I guess it depends from what perspective, right? So if someone is ready to sell their capital property, real estate, I guess that's the decision that everyone needs to make on their, individually, right? There's all sorts of reasons why we may need to sell property, but what I would say is, if you're not sure and you're not really urgently needing to sell property that will maybe fall under these 2/3 rules, I would maybe hold off, at least for half a year to maybe 12 months to see what happens federally, because it is possible that this inclusion rate may be sort of repealed and come back to 50%. Now, what's interesting is that the 2/3 change hasn't actually passed full government and legislation. It's sort of been proposed, and it's putting CPAs at a really interesting position because we're not really sure what to do. And most CPAs, to my understanding, are sort of applying the new 2/3 rules with the understanding that okay, it's really a formality at this point, but so we'll see what happens. There's still a little bit of uncertainty with that, but that's sort of what I would comment there, is that I think from a political side, I think I would argue that, bring the inclusion rate back down to 50%, but also, Ron, because in the US, the capital gains rules are much more competitive than Canada. And again, this is another area where I would argue that Canada has maybe lost competitiveness because of some tax regime changes. And again, these are things that we have to consider, because if you have multinational companies or even an entrepreneur who has an idea and wants to start a business and sees these sort of looming increased taxes and other burdens, so to speak, will I maybe decide to start my business or grow my business in Canada, or would I do it in the US? And I think these are very important conversations that we need to be having.
Correct. And even you listen to a lot of American real estate podcasts, and they talk about things like the 1031 exchange.
Mm-hmm.
And it sounds incredible, where if you could take capital from one property, move it to the next, build it to another. And this goes back to your point that the capital gets kind of moldy here, because if you have to get taxed on it at every stage of the game, you are going to get into more of a buy and hold forever scenario. And This isn't conducive to funds flowing and new property being built and things being transferred over. And so things get very stagnant. So I think it's an interesting point, chatting about competitiveness and staying kind of on this theme. I hadn't even heard about this until you'd actually sent me a message about it, the digital service tax. The tax has been flagged as a measure making Canadians less globally competitive. So I did a little bit of research on this, Michael, but walk us through the digital service tax. Not that we're not taxed enough in Canada, but walk us through this latest iteration.
Yeah, for sure, Ron. So it's interesting because I stumbled upon this, and it wasn't covered broadly, so to speak. It was a little difficult to find. And I think although the application of the digital services tax may be seldom, the impact, I think, is what's very important to understand. So basically, the DST, the digital services tax, sounds similar to GST because it kind of acts the same way, except it's a little bit different. This is targeted at digital services, and there's different criteria that qualify for what digital services are to sort of encapsulate. Some of them are things like advertising services and so forth. So companies like Shopify, Amazon, and others are would sort of would fall under these rules, and it's targeted for large businesses. So the DST says basically if you have a consolidated revenue of over 750 million euros, so consolidated meaning all of your companies. Okay, so that's all of any offshore, if you have your multinational companies that have, companies in the Caribbean and in Europe and elsewhere, they're looking at all of it saying, look, if the whole group of companies together has over 750 million euros of revenue and $20 million of that is in Canada, you're going to pay a 3% digital services tax. And that's the rule. So the idea is as well, this shouldn't really be a huge impact because most businesses are smaller businesses. Over 60% of the economy is small businesses. But we're kind of targeting the big companies. The issue, so the intentions, I think, were well meaned. In other words, so one of the issues, Ron, not to go too deep into this, is that you have this particularly applies to e-commerce businesses, because one of the things in tax that we look at on determining whether the income is earned in the country or not is something called a permanent establishment. So really, does the company have boots on the ground and roots, so to speak, planted in the ground, right? And to the extent that that isn't present, then again, this gets a lot more complex. The company doesn't necessarily have to sort of allocate some of that income to that country. So you can see the issue here where you have, streaming e-commerce businesses that are, selling to Canadian customers, but they have no offices here. So it's like, well, Canada wants to get a chunk of that income. And you can argue whether that's good or not. But the point here is that this DST is now sort of targeting that issue where, well, you don't really have a permanent establishment, you don't have boots on the ground here, so we're going to sort of tack on this 3% DST rate. So you may say, well, what's 3% on a company making, almost a billion? I guess if you convert 750 million euros, it's over a billion Canadian. What's 3% of that? Well, Ron, you and I know what's going to happen with the 3%. Anyone who's consuming the services of those companies, the companies are going to push it down to the consumer. So the question now becomes, okay, you can do this. Okay, are the intentions, were they properly implemented? Sure. But what's the sort of adverse effect of this, right? So now you kind of have this issue, and I read an article recently where now the U.S. administration is actually using this DST, which, by the way, was implemented middle of last year, and also, interestingly, is a retroactive tax. So it actually now goes back to 2022. So,
Oh, wow.
yes. So how do you plan for that if you're a multinational company, right? So it's quite difficult if we're going 3 years back into the past. But the U.S. government now has sort of, or potentially, again, it's hard to see the data on this because there's the discussions regarding tariffs and trade and so forth are not that public. But there's comment about how this DST will be discussed. In other words, they may use this as a bargaining tool, saying, well, you got this 3% DST tax, now you're going to generate all this revenue now, which again, will start January 1st this year for Canada. Okay, so going back 3 years, but that tax now has to be filed and implemented starting January 1 this year. So that's how that works. So they're basically saying, well, if our companies are paying the 3% tax, why aren't your companies going to pay the 3% tax? And this is the big issue, Ron, with tariffs and these taxes and so forth, is that I think there's a way to sort of figure this out as much as possible through a diplomatic way. In other words, avoiding trade wars. Because one of the issues is as well, and again, this isn't just Canada's issue. This is, I would argue now, what President Trump's administration is doing, saying, well, we're just going to slap a 25% tariff and see what sticks and what falls. It's like, well, wait a second. If you do this, and Canada's already said this, we're going to basically retaliate. And now what do we got, Ron? We have now a trade war. So, and then who's the beneficiary of that, right? So these are the things that I think about when these kinds of taxes are implemented. Again, I'm not suggesting that things like the DST or increase in taxes is necessarily a bad thing. The question is have we considered all the potential rocks that'll fall and settle after we do this? Have we carefully considered this from a diplomatic and from a trade relations perspective as well? So those are my thoughts on this.
I heard a good quote the other day by Thomas Sowell that there are no solutions, only trade-offs. And
Yep.
I think for a lot of folks who are looking at kind of where our deficits are, realistically, those deficits have to be paid with something. And so it's easy, like you say, to go after big corporations and levy that, because there's a very small minority of businesses and people who make large amounts of money. But realistically, those are also the companies that have great lawyers, or they're the companies that have the choice to pull out from services. We kind of saw a version of this with Facebook and Meta, that they no longer have, you can't find news on Facebook anymore. And so these big corporations have the ability also to weather some of these things and to outlast consumers. So it is an interesting one. And you can kind of understand the government's plight that we need to increase tax to pay for all of this government spending. However, there's always going to be a trade-off when you put that tax in. So just lastly on this, Michael, how could the DST be revised to maybe better align with competitive global practices? Or is there a way to do this where you're getting your cake and eating at least a little bit of it as well?
It's a really good question, Ron. One of the issues, again, from an international tax perspective, is how do we get a chunk of that income if these companies don't have these quote unquote permanent establishments in the countries? It's an issue. It's not just in Canada, it's an issue everywhere. And accountants and tax lawyers are all sort of involved in those discussions to the extent they sort of practice in international tax. It's an issue. So the question becomes, how do you sort of mitigate that? And again, there's an organization called the OECD that has different sort of plans on trying to sort of target this. What's interesting is Canada was one of the first movers on this kind of e-commerce tax, so to speak, which is the DST, and none of the other countries have sort of followed suit yet, as far as I'm aware. So we basically are first movers on this, saying, well, we're going to do this, so we did. So what's the impact now? And that's what I guess time will tell. Is this DST going to stick? Is it not? So I understand the issue. The question is a 3% blanket tax on these companies that fall under these rules, is that the answer, right? Should it be 1%? Should it be 2%? Or perhaps maybe there's a diplomatic way to discuss through the government, I guess, to say, well, look, that you have this issue too, we have this issue. What can we do to maybe sort of equitably, try and make it so that when these companies are doing business in our respective countries, we get a chunk of that tax revenue, right? Because again, this isn't just a Canadian issue. So I think there's some diplomacy that can happen in these discussions. Again, it's a challenging one because again, there's a lot of nuance and subjectivity to, well, are you doing business in this country or are you not? So I can understand the hardships of how do you tackle this. The question becomes, did Canada do this properly and correctly? And because this has just been implemented, I guess time will tell if these companies that are subject to this tax are, one, going to push this down to the consumer, which I think they will likely push some of it, if not all of it, down to the consumer. And two, are they less likely to do business in Canada now because of this DST? And another thing that you mentioned too is even the Meta, Facebook, Canada. Another measure that Canada did is trying to basically say, well, look, if you share published information from news outlets, there's going to be some revenue sharing here because you're monetizing this content and so forth. And Meta basically said, okay, well, no more sharing news on our platform. So are you going to see more of that kind of thing where where the consumer maybe is getting less services or opportunities, or companies are doing less business? I'm not sure, but it's really, really interesting. And the DST was not very well covered in the news, and I think it's, again, not that it's it's going to be impacting everybody, but I think it's interesting to kind of see what Canada is doing to try and target some of these larger issues, right? So.
Let's bring it all back. We are the Saskatchewan Real Estate Podcast. So let's talk about how all these different things can affect the housing market And when you boil it all down, like the housing market is very simple. It's supply and demand. So heading into 2025 and even narrowing down to Saskatchewan, or take it as broad as you would like, how do all of these things affect a housing market? And are there any predictions or any things to watch for, key indicators that regular folks could look at and say, this is kind of where we can see the housing market heading?
Really great question. So yeah, I know we kind of went macro there. So let's bring it back home. So just to kind of stick on the macro side just for a second here. So again, with inflation being under 2%, it's likely the Bank of Canada is going to continue decreasing rates. So I would suspect that if that is the trend, you're going to see mortgage rates decrease, which will again bring the cost of borrowing down. Again, that could again cause pressure on housing prices. So that is likely to happen if we don't get more supply. And supply is really the question mark. Is, well, how do we get more supply to bring those prices down? And it's not just from home sales; it's also on the rental market side too, where rents are increasing at record levels because there's no supply. So the question is how do we increase supply, right? The demand is there. We need more supply. So I think the more we can sort of cities, municipalities, and maybe even federally sort of bring in incentives and maybe provide, a little bit less regulation to, hey, from the permitting process to sort of completion and incentivizing investment, I think that will go a really, really long way. And one of the things I also sort of argued when I wrote to the government was, well, we may need also some more tax incentives for companies to also invest in more, in building and purchasing these rental properties, whether it's to renovate and bring more units to the market, whatever the case may be. And again, I'm not going to bore you on the details of how they could do this, but there are ways they can do this. So I think the question becomes supply. But in general, I'm regardless of this, I'm very bullish on Saskatchewan. We're very well positioned. We are very resource rich agriculture. We have great talent here. We're still very affordable compared to the rest of Canada. It's a great place, and I think that will continue regardless.
And also, I just love to piggyback on kind of our previous conversations around the Canadian dollar and these different taxes. Folks who are thinking about moving to Canada, because a lot of our population growth is driven around immigration. Now, as you pointed out, Canada is still a wonderful place to live. But when you start comparing it to other countries that folks can go to, where maybe the tax incentives are a little better, your money goes farther, you also start to lose out on that edge of people wanting to come here as a number one spot. Could you just maybe expand a little bit upon that as well, Michael?
Yeah, I think that's a good point. When you look at the Canadian dollar again falling, for anybody spending money in Canada, it's a good thing for consumers, right? So whether you're coming as a tourist or buying goods and services here, that's a good thing. But one of the things that's interesting is that if house prices continue to rise, the falling dollar won't really help too much, because even in Canadian dollars, the house prices are still increasing. So I think that's important to note too, is that yes, we do have a weaker dollar, which is not ideal for sort of general business and commerce in Canada. But if prices for housing and rentals still stay strong and increase, I'm not sure there will be sort of opportunities in that side. Again, it's a supply issue in my opinion.
Okay. Last question before we get to your contact details and your great big ask, Michael. What are your top 3 recommendations for Saskatchewan policymakers? And you tied it in because you've actually written it and actually made some recommendations for policymakers. But heading into the future, if you were the king of Canada, what are some of the things that you would implement to help our economy and help things move forward?
That'd be a big responsibility, Ron. But well, I'm a tax guy, so from a tax perspective, I would say there's probably a lot that can be done from a taxation perspective, whether it be to provide incentive in different areas. I think that's a big one. The second, I think, is again a supply issue. So how do we increase supply? So deregulation, whether it be to sort of incentivize, new applications for construction, or whether it's a zoning issue. Again, there's a lot of issues you can, for anyone in the real estate market that has maybe gone through this. There's a lot of red tape in that process. So I'd say those are probably the two two big ones. I don't know if there's really a third one, I guess I can tell you right now, but I think, the question is, how do we make Saskatchewan and Canada broadly more competitive? And I think that will help, because the more capital we get into Canada, and more competitive Canada is as compared to sort of our neighbors and internationally abroad, the stronger a dollar will get, the more investment we come in, the more employment comes in, and and more GDP growth. So it's all kind of a huge cycle. So I would say, yeah, to sort of conclude it, from a taxation perspective and maybe a deregulation perspective would go a long way, because I think we've kind of, a lot of what we discussed today is sort of focused around those two main areas.
Brilliant. Okay, Michael. I know personally from experience that you offer wonderful consulting services across a broad spectrum. I'd love you to promote that, your YouTube channel. Let us know how people can get in touch with you, and just some of the things that you're offering folks as well.
Yeah, for sure. So I thank you, Ron. I do personal and business coaching and consulting, financial education consulting. So if anyone is interested to, has an issue and personally or in their business, and maybe wants to grow their business or start a new business or needs help in any of these areas, I have about a decade of experience now in business, and majority of which as a CPA. So yeah, you can reach out through LinkedIn, through my name there, Michael Hernik, or you can send me an email at mike@thefinancialmechanic.com, and would be happy to have a conversation.
Awesome. As always, Michael, thank you for your expertise and your macro and micro perspective on these topics. It's always a pleasure to have a conversation with you.
Thanks, Ron. Appreciate the opportunity.
Thanks for tuning in to the Saskatchewan Real Estate Podcast. Don't be a stranger. Whether you're buying your first home, refinancing, or investing in real estate, I'm here to help you navigate the mortgage process in both Saskatchewan and Alberta. Use the booking link below to schedule a time to chat. If you found this episode helpful, don't forget to hit the subscribe button so you never miss a valuable piece of real estate information. Until next week, I'm Ron Caroni, your Saskatchewan mortgage professional. Bye for now.